Hi everyone, welcome to new video. Today I prepared a unique and simple strategy for you. Our strategy is related to the RSI indicator and the trading time frame is 5 minutes. Of course you can use all the time frames, but our work style is scalping and 5 minutes is suitable. Add the RSI indicator to the chart from the indicators section. We go to its settings section and remove the tick-based option from the style section and disable it. And then we leave the settings section. The RSI indicator shows the strength of the trend and momentum and has many points inside. The RSI line is between 30 and 70 in a box, and the 50 line is in the middle, which is the middle line. In general, if the RSI line is above the range of 70, it indicates overbought, that is, the buying power is saturated and there is no buying, so there are many sellers. And if it is below the range of 30, it indicates oversold, that is, the selling power is saturated and there are no sellers, so there are many buyers. This is an almost correct hypothesis, but it does not make us trade based on this hypothesis and sell whenever the RSI line is above 70. And whenever it is below 30, let's buy. This is one of the biggest mistakes of a trader. Therefore, we accept this issue as a hypothesis and it is correct. But we do not trade, because it is not always true. Our strategy is to find and trade divergences through RSI. Divergence means that the price and the indicator move in opposite directions. For example, if the price goes up and hits a new ceiling, but the RSI goes down and the ceiling goes down, divergence has occurred. In this area, as you can see, the price moved up and hit a new ceiling, but at the same time the RSI went down and divergence occurred. In divergences, since the RSI is the basis and has moved down, the price will also move down according to the RSI and we are considering a short position. In this example, as I said, the price has gone up, but the indicator has gone down, so the short position is our target and we are looking for sell. How can we open a position now? Where should we open a position? If you look carefully and draw a trend line like this, you will see that the trend line breaks somewhere. When the trend line breaks, we enter the short position and set TP and stop loss. We place the stop loss above the last roof and place the TP at least 5 times the stop loss. So our strategy is, we find the divergences, then we draw the trend line and we enter the trade when the trend line breaks. Let's go to the next example. In this situation, the price has gone up again, but the indicator has moved down, so a divergence has occurred and the price will go down. By drawing this trend line, we will know where to enter the trade, which is exactly here. When the trend line is broken, we take a short position and place a TP and a stop loss, which is very important. In this example, the price has moved down, but the RSI indicator has moved up, so the signal is bullish, and we realize that the price will move up, and we will open a long position. We draw the trend line in this way, and when the trend line breaks, it goes up. We open a long position. and set DP and stop loss. This strategy is simple and practical, and with practice you can personalize and use and enjoy. Please comment your opinions and criticisms about the video and the channel so that the quality of the videos will increase day by day, and raise the topics you are looking for so that we can make a video about them. At the end of the video, I will give several more examples to complete your learning. I hope you liked it. Bye until the next video.